Welcome to Multifamily on Fire, where we help educate real estate investors to grow their real estate portfolio to reach financial independence and retire early. And today, our special guest is 24-year-old full-time real estate investor out of San Antonio, Texas, currently controlling over more than $3 million in commercial multifamily assets. And one of his strengths is finding mismanaged, value-add, and off-market properties in emerging markets. And that's what we're talking about today. How do you find the deals, and how do you choose to wholesale or either buy and hold? And so please welcome Adrian Salazar.
Thanks, guys.
Yes.
Glad to be here. Thanks for the invite, Rachel.
Yes, I'm happy you accepted. Thank you. So, you know what? I heard you speak before in another podcast. You mentioned that you actually wish that you started earlier. And I know you started in real estate residential at 18 years old. And I thought that was so amazing because I just really appreciated your mindset. And so can you just talk real quickly about how important it is to have that mindset and, that personal development?
Absolutely. I think, great question. I think that is, the foundation to anything. I think, you can only go as big as your mental capacity is able to, understand. And I think, it all comes down to developing your mind. It's a muscle. It's the same idea of going to the gym, getting stronger every day. Same thing with personal development. In the beginning, it might be a little tough to fully understand, what you're listening to when you're hearing people like Napoleon Hill for the first time, people like Jim Rohn for the first time. You might not fully understand it at first, but as you start diving deeper, taking notes and applying it into your life, I think, it's really the reason why I am where I am. And I've been able to overcome the challenges that I've faced, while getting through, this 7-year real estate career. So I think mental, personal development is key. You have to have the right mindset in anything, real estate. If you want to be a lawyer, if you want to be a dentist, a doctor, a veterinarian, I think it all kind of comes down to the right mindset towards that occupation that you choose. So, having the right mindset is the most important thing before you even start talking about real estate. There's so many things you can listen to. Tony Robbins changed my life. Napoleon Hill still changes my life every day. I read Think and Grow Rich every other day. And people like Jim Rohn, Bob Proctor, Esther Hicks, Abraham Hicks, all those real big personal development people, I think is important to really study. And you have to get that down right in the beginning.
So what is your mindset? Because I know a lot of people, they'll be like, oh, I'm too young, or maybe I'm too old, or, I don't have the resources. What do you think that kept you going?
Yeah, absolutely. So I think, I go by a little phrase and I like to, share it with people. It's every day and every way I'm getting better and better. Every day in every way I'm getting better and better. And when you start to repeat yourself that, and you fully integrate it in your mind and in your daily routines and habits, you always try to find a way to get better, right? Whether it's learning something new, a new strategy, a new way to talk to somebody, a new selling technique, a new negotiating habit, a new book. Every day in every way I'm getting better and better. So that's kind of what I like to go by every day. And create win-win situations for everybody, our tenants, our investors, our families, our friends, always just trying to make people better around me. So
nice.
I think that pays off.
Nice. I love that. Every day and every way I'm getting better and better. I love that. Because I heard someone say something like, every single day that you try to improve yourself, so that, and there's 365 days in a year, so you'll be 365% better than you were when you started in the beginning of the year. So I just thought that was just interesting. So I like that. Okay, so like I said, I know you started in residential, and can you talk about that and then how you broke into multifamily?
Sure. So I started off in residential because I knew no other way, really. I was 17, college student, and I was part of a direct selling company, direct marketing, selling products, health and wellness products. And I had a team, and that's kind of when I got introduced to the idea of personal development. I got introduced to the books, the mentors. And so that company kind of went out of business, and I was on Facebook one day and an ad popped up, Robert Kiyosaki, Rich Dad, Poor Dad event in San Antonio. It's a free event. He was going to be there. I thought he was going to be there. it ended up being like one of his coaches or something, but I showed up, it was a free event, and all they were talking about was pre-foreclosures, and how you could wholesale houses and make money from them. And I mean, I saw an opportunity there, and I met a few people in the room, and they recommended I go to a RIA, and I attended the RIA, the local RIA, signed up for the RIA, met a mentor in there who I had coffee with, the following weeks later. And I said, I'm here to learn. I know, you probably get a lot of people who ask you the same thing, but I'm different, let me prove it to you. So, he gave me a few things to do, a few flyers to go out, a list to generate of, ugly houses, distressed properties. I did that all within like a week, and he got freaked out because nobody had done it that fast. So, he started, long story short, he started really seeing something in me that, a lot of people, I guess, didn't see, that I was trying to, 17-year-old trying to go up to people like that annoying little kid, and he really saw something in me, and I'm, till this day, I'm super grateful for it. But, I worked for free for him for about a year and a half. So, he gave me a few things to do, and I was going to properties, taking pictures of properties, meeting owners. And pretty much the way I started was he would generate leads, and he would send me to the houses to go take pictures of them. That way he didn't have to go, and then he could analyze them from his computer. So I would do that. And then as I was doing that, I was learning how to build rapport with sellers. I was learning, what to look at and things like that. So I started learning all that. And then, fast forward a year later, after working for free for him, I finally started getting the hang of, generating my own leads. So then I started, door knocking, cold calling, getting off my car, going door to door, just letting people know about our services and what we do. And I mean, we ramped it up. We were wholesaling about 5, 6, 7 houses a month. And that was kind of where my strength was, because I didn't have a lot of money and I didn't have very good credit, but I had time, and I had, a drive to go out there, a desire to go out there and make it happen. So, I started off with that, and dug into all my savings and pulled out student loans to be able to pay for bills because I wasn't making any money. And then, I mean, fast forward, we started the company, the wholesaling company. And that's when, finally we started seeing better paydays, and, I got a portion of the equity of the company, and we kept going, we kept moving and marketing for deals. And I ended up building an acquisitions team, people who were calling for us, people who were door knocking for us. And that lasted about 3 years. And I know you mentioned, that I wish I would have started sooner in multifamily. And I think those 3 years is where I should have just, found multifamily earlier, and started marketing for apartments instead of houses, because it's drastically different. And, fast forward 3.5 years of wholesaling houses, and I finally bought a course. It was like a free, like 2-day seminar event that I paid like $100 for, and went over there in Dallas. It was a Brad Sumrock event, changed my life. And after that event, we started marketing to apartments, small apartments. So anything over 12 units, from 12 to like 40 units, because we figured, less earnest money, easier to talk with, mom and pop owners, negotiable, easier to get kind of thing, not those big LLCs, hedge funds who own the 100+ units. So we found a niche there, started marketing, and my partner actually took off with multifamily before I did. I still kept wholesaling houses and sending mail to, but there was one that he wholesaled and made over $240,000 on a wholesale fee. And after I saw that check, I have not touched a house since. That was about 3 years ago, 3.5 years ago. And I mean, I'm just taking off with multifamily. I think, I was stuck in a transactional based business, where I had to go out and find that next deal. I had to go out there and, close one wholesale. Yeah, 5, 10, 15,000, but what's the next one? What's the next one? What's the next one? It was not residual. It wasn't passive. And so that's kind of why I went into multifamily, and I really love the cash flow side of it. So it's been a journey, but, I had to go through it to get to where I am. I think everyone, has a story, and mine started off just, doing houses. And I think, what I learned in the house, game is how to find these deals. So I got really resourceful on how to find off markets and, negotiate directly with seller, build rapport, overcome objections. And I'm really just applying all that now in multifamily, and it's just a bigger payday. So
when you when you first started, I know you worked with your mentor for a year and a half before you actually, for free, before you actually decided to really branch out and do it on your own. But how long would you say it took you to get your first deal? Do you even remember that?
A year and a few months.
So you worked for free a year and a half, and then it took you another year to get your first deal.
So a year and a few months of me going to the leads that my mentors were generating. So they were generating leads already. And I would just go and take pictures and, like I wouldn't go and get the contracts or anything. So I was doing that for a year. And then after that year ended, maybe like a good 6 months, 7 months until I finally generated my own lead, got my own property under contract, like by myself. So, I mean, I did it. It took me a while because I wasn't very confident in myself in the beginning to be able to get go completely on my own to the house and get it under contract. Like I always needed him to be there and I needed him to be there and guide me through the process in the beginning. So I would say my very own first deal, it took me about a year and 6 months ever since I got started in real estate, including the year of mentorship. So about a year and 6 months. But
Wow.
I wasn't in it for that. I wasn't in it for a check. I wasn't in it for, just the money. I wasn't in it for the commissions. I was in it for the knowledge. I was learning so much. And, I started, realizing that I could apply this for the rest of my life. Like my mentor was teaching me something that's invaluable. I mean, there's no price tag I can pay him for what I've learned with him.
Mm-hmm.
So I wasn't really focused on the check. And I think a lot of people, misunderstand their reason why they're getting into the business.
Mm-hmm.
Uh, but you have to really figure it out in the beginning. And I think that's what's going to drive you and, allow you to go far in this industry.
Right. I think that goes back to mindset because I know a lot of people when they you see people all the time, even on social media, and they're talking about wholesaling. And I hear stories like, oh, I got my first deal in 2 months or in 6 months. But for you, it was over a year.
Yeah.
And can you imagine if you had given up, but your mindset was totally different?
Yeah. Yep.
Yeah. So I
100%.
love that. But so when it comes to, I know you said you wish you had actually started with multifamily, especially when you saw that big check. So you were like, okay, you should have got started there. But I know you wholesale residential versus multifamily. Was there a different learning curve? Like, what do we need to know if we want to wholesale multifamily?
I think, I always like to say, call wholesaling simple. It's not easy, but it's simple.
Okay.
The idea of finding a motivated seller, structuring a good deal, getting it under contract, and finding a buyer who buys those particular properties. It's a simple concept, but it's not easy. It takes work. It takes grit. It takes, you have to really put your head down and work. I think, honestly, it's harder to wholesale single family than it is multifamily. It's more of a headache.
Wow.
It is like I mean, it's a very small check compared to what you're getting on an apartment wholesale deal on average. And you have to really babysit these homeowners. I mean, I was babysitting, I was holding hands, I was crying with them. Because I was finding people that were in pretty rough situations,
Mm-hmm.
because I was getting those 50 cent on the dollar, properties that needed a lot of work. So I would help owners move out. They wanted to sell, but they didn't want to sell. I had to really guide them through the whole process. And with apartments, the owners are investors. They know money. They know numbers. You know, every property's for sale at the right price, kind of thing. So it's a little easier to deal with apartment owners and wholesale those compared to single family.
Mm-hmm.
But then again, I didn't know that in the beginning. I found that out later. So, but
Okay, so can we talk about the actual steps to okay, so we know like finding when we break down wholesaling, you said it's simple. You find the seller, you structure the deal, you put the contract you get together, and then find the buyer. Can we break that down? So when it comes to finding the seller, how do you even find them, those mismanaged properties or what we're looking for, wholesaling multifamily?
great question. So I think you have to really pick a market. You have to pick a market, right? That and don't spread yourself too thin. Don't go starting to market in 10 different cities, 10 different markets. There's enough in your market. I promise. There's enough properties everywhere in your market, depending on where you are. So pick a market and get a list. Get a list of 12 plus units from anywhere between maybe even 8. My first wholesale apartment complex was an 8 unit. So you could do like 8 to 40 units, 8 to 32 units, more or less. And you'll typically find mom and pop owners, self-managed properties, maybe even paid off. You'll also even find that these properties might need some work. Typically, people don't dump a lot of money in these smaller ones to renovate. So get that list, and you could do all kinds of things. I always like to think of marketing, especially in apartments or houses or real estate in general, as a boat, like a fishing boat, and you have either one rod or 6 rods. You know how they have those little holes in the boat. You can you throw a rod and you just leave it there. So that's the kind of idea that I like to see marketing for real estate deals as. So I would send postcards. Not letters. I always recommend postcards because they're 100% open ratio. No one needs to open the envelope and get your mail piece. A
Yeah.
postcard, it's already there. It's you read it automatically. So your chances of them reading your mail are a lot higher. It's cheaper. It's like 34 cents a stamp. I mean, if you do bulk stamps, then it's a lot cheaper. And what I would do is I would get like a sheet of paper and divide it in 4, and that I would get 4 postcards with 1 paper, and I would send, write it by hand, send it to Office Depot, get it scanned, cut, and put the stamps on. And I would do like one of those mail merges, and just merge all the addresses, and then I would just stick them. So send postcards, get a number, get it like one of those call rail numbers that you could like a tracking number that possibly even has like a recording. So callrail.com is a great software for you guys if you guys want to look into it. It's like $30-$40 a month, and you can get like 10 numbers. You can choose your area code. So I would recommend the area code where you are marketing at. That way it's very familiar to local number. And that number, you put it on the postcards. So that way they're not calling your cell phone. They're not calling, something else. And you can track it. And you can save it on your phone as postcard marketing, campaign, right? I would also talk to small property management companies, like companies in areas that have, that manage apartment complexes, smaller mom and pops, and let them know what you do. Let them know that you're looking for, apartments in that area. If they, know any owners that are distressed or, are facing something, they're the ones who, they're in communications with the owners. These are the people you want to be in front of, and you want them to know who you are. Send them a flyer, put them on your mail list, newsletters. I mean, let them know what you do. I would also, so one big thing that's helped for me and the most successful for me right now is cold calling. Skip tracing these 8 to 32 units and finding the owners and cold calling them. Hey, my name's, Adrian. I am a local investor in the area. I was driving by your, neighborhood and saw a property there on 123 Main Street. Do you happen to know anything about it? I mean, just simple pitch, no crazy scripts, nothing like that. Just simple pitch, and let them know if they've ever thought about selling before. Have you ever entertained an offer? Can I send you an LOI? That way you can just have it in the case that, sometime down the road you might be open to sell. So cold calling is super key. There's a lot of softwares called, Mojo. There's a Mojo dialer. There's all kinds of dialers that you could be calling 3, 6, 10 numbers at once, and really, maximizing your time on the phone. But I think, that is a great way. You can also drive for dollars, like drive your neighborhoods and look for apartments. I mean, the same thing as houses. I mean, I would drive for dollars, look for distressed properties. Now just drive for dollars, look for distressed apartments, and write down the address. And I go to the county clerk, find out where the owner's at. If it's owned by an LLC, I'll track down the LLC. I'll find the owners of the LLC, send them mail, skip trace them, cold call them. We also call for rent signs, like those for rent signs that are on the apartment complexes, with handwritten numbers. Let them know, hey, my name's Adrian. Same thing, same pitch, same idea. Yeah. I was driving the area. I saw, the apartment complex here. I'm looking to add more apartments in this market to my portfolio. Do you know if the owner has ever considered selling before? Is there any way that I could, get in contact with the owner and let him know what we do and make him an offer?
Great. I see a question from Clay. He said LOI. What is that? Basically, it's a letter of intent, but can you explain any more about that?
Yeah, it's a letter of intent to purchase. So typically, we send LOIs once we get on the phone with them. We get on the phone with them, and they say, yeah, I mean, give me an offer, right? So that's where the next step is, and I have that note here, the questionnaire, right? I mean, it's a little bit different. I'm not sure if majority of your listeners are in single family or not, but I think that it's a little bit different when you're asking the questions compared to the single family and multifamily. Apartments are valued upon what they generate, the income that is produced. So you have to ask the questions to the owner to figure out what, as close as possible, what that NOI is, the net operating income. That way you can research, the market and get a cap rate and then find out your offer. So you want to ask them what the income is, what the expenses are, get a more or less net operating income number, and then divided by the cap rate, and then you get a value. And then that is where typically our LOIs include 70% of the ARV. Offer number one, it's a cash offer. And so 70% of the value of the apartment, not ARV, I guess, but the value of the complex, current value. And then, 85% would be option number two with some owner finance terms. And then option number three is a little bit less of a down payment with better, owner finance terms and a higher price. So we have three different options sometimes, but you always have to figure out if there's debt on the property or not and how you can structure that. But our LOIs can get creative, but typically, standard template, your name, their name, thank you for the opportunity to make an offer on this property kind of thing. Option number one, option number two, option number three, and then just some short terms, feasibility period, closing day, sign it, and you're good. That's kind of an LOI. And again, it's not binded, it's non-binding. It's just to get the conversation started.
Right. And does it ever expire? That was a question from Clay.
Do we give a date the LOI expires? No. Again, the LOI is very vague. It's just to start the conversation. It's to start the conversation and to possibly get a tour of the property and to get some sort of mutual agreement on a price and terms and things like that. That way, that's the great thing about multifamily too is typically we send LOIs without seeing the property. So it's really just based on the information that they provide.
And I know when you were talking about marketing, we can, when you said get us a list, and I know that you can drive for dollars, like you said, send out postcards when we get those for what are other ways we can get a list? Where do we get the list from?
Yeah. So there's sources like CoStar. CoStar is a little pricey though. It's about $400 or $500 a month. I don't suggest CoStar until you've done a few deals maybe, but CoStar is probably the best list provider for apartment complexes. You can do one called Reonomy, REONOMY, Reonomy. There is List Source. There's, Prospect Now. There's one called Prospect Now. It's pretty good. I've used it. And then I just get a list. I generate a master list. I pull a list from List Source. I pull a list from CoStar. I pull a list from, and then I'll just kind of create a master file. And then on that master file is where I'll have all the properties in every market, and eventually I'll be able to know the owner's number of every single one of these apartment complexes.
And I know when they say when you're pulling a list, you can actually, critique that list to whatever specifics you want. When we're trying to wholesale a multifamily property, what are we looking for? I know you said somewhere between 8 to maybe 40 units, but maybe out of town owners or vacant. What do you look for to get those?
So you want to make sure there's I guess quote unquote value add opportunities. You want to make sure that again, you could wholesale anything. You could wholesale new builds, you could wholesale Class A apartment complex. But what my specialty is, I guess, from my experience, is finding these apartments, these small ones, 24 units, 32 units, that are mismanaged, owner managed. They do the work themselves, same paint. I've wholesaled some properties that have the same wall paint, same trim paint, same door paint, same cabinet paint, because it's easy for them to go in and do a make ready. It's the same paint everywhere. So, I mean, these types of properties are gold mines because, again, apartments are valued based upon the income, right? So if you're able to increase the income by doing small renovations, then the value of your building increases. So whenever you are wholesaling, you want to find a good deal for the buyer, right? You want to make sure you're getting a good enough property that has meat on the bone. That way you can also make a nice chunk of money on the sale, right? On the difference. You like small idea, small concept on wholesaling, but typical. I'm not sure if you guys know cap rates and NOIs and stuff. So you want to make an offer based on like on a 9 or 10 or 11 cap, and then end up wholesaling it for like a 7 or 8. And that difference of that percentage of difference is where you'll see double digit 6-figure fees. I mean, 5-figure fees. You'll see a lot of those typically on when you're messing with those cap rates. So you want to make your offer on a higher cap rate and then wholesale it at a lower cap rate. And that's really where the magic happens.
Nice. Okay, so now let's say we found the deal. Okay, after going through our list and we cold call them, now we have that deal. And so, how do you structure the deal? What are the ways to structure the deals?
Yeah, I mean, there's all kinds of ways. You can assume a loan, you can, create a note, promissory note, and if the property's paid off, you can structure it that way. But I mean, I think really the main thing is the price, right? Because you're going to end up wholesaling it. You're not buying it. So it's really not for you to determine kind of what the exit is, more so than it is to know your buyer and know what he's looking for. That way you can structure it according to that. And it's just an easier way to wholesale. I mean, a lot of people try to, just get a property under contract and then go out and wholesale it. And it's just doesn't make sense. And it's just a horrible structure, the way you put it together, and you don't find a buyer, and then you ruin the relationship with the seller, and then you ruin your brand online. And that's why wholesalers are not, like they're frowned upon. A lot of people don't really like wholesalers because they're, doing that kind of stuff. But just know for sure, the deal works, and, just know your buyers, know your market, and you'll be fine.
That's a good point then. So would you say we need to have a buyer first, find the buyers first?
No,
Oh,
don't wait on that really. I think you can know more or less by doing a little bit of due diligence in your area, maybe attend a RIA, maybe, sit over coffee with a couple of, apartment owners in the area that, are willing and open to have lunch with you, and you buy them lunch and you ask them a few questions to figure out more or less what the market looks like. But I still think, having a good deal, the money comes, the buyer will come. So if you know what a good deal is in that market, you'll be all right. I promise.
okay. And when it comes to the contract that you have the agreement with the seller, what are some paperwork that we make sure we need to have?
So, again, I'm not an attorney. I'm not.
Yeah.
Right?
Disclaimer.
Disclaimer, recommendations. I mean, I use a standard commercial, contract. Here in Texas, there's one that you can find, like the realtors, I guess, put together. So we use that one. That's kind of the only one we use for contract purposes, unless we're buying a $5 million apartment complex. Then we get, $20,000 attorneys involved and things like that. But I think to wholesale, you just need that standard commercial contract. Make sure you check on there that it may be assignable. Not sure if in you guys' markets they have that standard commercial contract, and they have that checkbox already. But make sure that if you're going to be wholesaling it, make sure there's a box that says you can assign it, or put at the end of your buyer name and or signs. You'll be all right. And then you want to make sure you get all the financials, all the rent rolls, all the P&Ls. And then later on down the road, you're going to have to get the leases. You're going to have to get any contracts with utility companies that for the buyer. So be prepared to get a lot of stuff for the buyer, because the buyer is either going to pay it cash or owner finance it or go get a loan with the bank, and the bank is going to be asking him for it. So you need to be prepared and start getting the documentation from the seller ahead of time as you go.
And what is the timeline? What is that process like of getting all that information?
So it's negotiable. I mean, it's really, I mean, I've wholesaled a deal in 30 days. I've wholesaled a deal and it took me 6 months, 8 months. Well, I mean, it really just depends. It's negotiable. But, typical 30-day feasibility or 30 to 45-day feasibility, 30 to 45-day closing is typically what I do. So, um, and then I'll do like $100 earnest. I don't think I've paid more than $500 from an earnest fee.
Oh, really? That's pretty low on a multifamily.
Yeah, I mean,
Wow.
it just comes down to building rapport and you know, again, the way I see it is, why am I going to tie up $50,000 of my money in earnest? It's not generating any interest. It's not making me any money. I'm an investor. I value the idea of money making money for me. And when I park $50,000 somewhere and it's not making me anything, and I'm going to park it for 45 to 90 days. Would you do that, seller? Would you put money somewhere and not make any money off of it? I mean, that's kind of where it's like, I could give you 20,000, I could give you 50,000, I give you 100,000. It's not going to make a difference. I'm going to close on this deal anyways. So, here's $100. Like, just
Mm.
contract binding. So, I mean, it's really, you have to have them trust you. You have to be able to sell them, and build enough rapport for them to trust you. But then again, I mean, if you have a good deal and it's going to make sense and you need to put up $5,000, be prepared.
Yeah, I'm not sure if you're holding your phone, but when you move it, it distorts the microphone. I don't know if you.
Can you hear me now?
Yes.
Gotcha. I think I had my palm on the mic. My bad.
Okay, it's okay. So that made me think, when you talk about building the rapport with the sellers, and that's what can help you get make a lower offer with the earnest money anyway. So can you talk about building that relationship? Like, what are some things? I mean, are you big on? I know you were in sales though.
Yeah. So, I think, what's helped me from experience. Again, I'm talking mainly on experience. I mean, it's just,
Yeah.
uh, like, build a relationship with them. When they call you one of your postcards, or they answer one of your cold calls, and you tour the deal and they're going to meet you out there. Don't start talking about the apartment complex. Don't start talking about numbers. Don't start talking about what's wrong with it. Ask them who they are. Ask them what they do. Ask them, you know like, how they're dealing with COVID. I mean, just
Mm.
ask them questions about themselves first, because people like to talk about themselves. So if you keep asking questions to them so they could talk to you about them, then they will automatically, like, want to be on your side, because they'll like you a little bit better because you're genuinely interested in their life. So it's just part of NLP and sales, I guess, kind of thing. So, you want to talk to them, and let them go in front of you. Tell me about the property. Walk with them. Don't go on your own. Like, walk with them and tell them, can you tell me about the property? Can you show me around? Can you, and that's when they'll start saying things and talking about things, and have a notepad and start taking notes down. But as you, like, are walking the property, is your chance. That's your chance right there for them to like you. And just try to be a friend, build a relationship. Don't see it as a sale. Don't see it as, you're on this side of the table, he's on that side of the table. Be on the same side of the table and tell them you're here to help. Where I'm here to create a win-win situation, here to put money in your pocket, and I'm here to help, revitalize this community,
Right.
and
Nice.
not so much about the money.
Yes. Nice. Okay, so now we're at the point where we have the property under contract. We have a good relationship with the seller. So how do we find these buyers?
Yeah, so great question. Um, there's many ways, really. So, I could name a bunch. The RIAs, you can pull a list the same way that you're pulling a list to find sellers. You can pull a list of people buying apartments in that area. So I've done it before where I call ListSource, because ListSource is very creative. Like, you can do 1980 builds only. You can do properties that only have X amount of debt or something, right? I mean, you can get really creative with ListSource. So you ask them, I want cash buyers of small apartment complexes in my area. And they'll pull a list, try to skip trace them, get a hold of them, and let them know that you're going to find a property for them soon. What are they looking for? Things like that. You can also talk to the same property management companies that I was telling you about earlier. They know owners looking to buy. You can also, so what I would wholesale them, I would put like kind of like an OM together, like a marketing package of the property, what I'm asking, rent rolls, current, T12s, T3s, T6s, pictures of the property, the location, about the area. It's a good 20-page marketing package
Wow.
for these properties. And I would put it on like a Google Drive folder and create a link. And so I would start marketing it on like Facebook Marketplace, Craigslist, different places online. But I wouldn't put the property. So I wouldn't take a
Okay.
picture of the property and blast the property, because then you kind of get into a sticky situation if the seller has a Facebook and sees their property is being marketed. So
Okay.
you can kind of get in some sticky situations if you start blasting the property. So never recommend to do that, but I recommend to post in Facebook groups that you have an off-market multifamily property available. It's 20 units, mismanaged, value add opportunity, in this market. Please email or call me if you want further info. And then gauge them, screen them. They're going to send you an email. They're going to send you a phone number. You're going to get a lot of people reaching out through these Facebook groups. And I would recommend to do that now. If you're really trying to treat this business like for real, I would start doing that now, even if you don't have a property. Like, just go to Facebook groups and add yourself to a bunch of multifamily groups, add yourself to a bunch of local real estate groups, even, people who are in storage units, even people who are in office investors. I mean, all kinds of groups. It doesn't hurt to be in other real estate groups. And you could, start putting on there that you have an off-market property available, and start putting all these people, all these contacts in a certain database. That way you're prepared when one deal does come through. So I think, you have to always be marketing for deals and dollars at the same time.
That's good tip. Thank you. Okay, so I was actually trying to write what you said down that stood out to me, but now I'm drawing a blank. Which one? What was it? Because you said you gave so much. Thank you. I don't. By the way, if anyone has any comments or questions, put it in the chat so we can get your questions answered. But so far, that's great. So now, okay, so we have the buyers. We figured out how to do that, and then so once you have that, you just rinse and repeat. You just do it all over again.
Building your list, keep building your list. I have thousands of people on my database. I mean, now it's just way easier for me to wholesale a deal. I can make a couple phone calls or just send a blast to people that I know for sure and I've already screened that are buying apartments. So the bigger your list, I mean, honestly, like one of the most really like best pieces of advice that I can give to somebody coming into real estate, or just ask me what I've learned along the way, is building your database. The money is in the database. The money will always be in the database. So any business card, any new connection you make, any new person you meet, put them somewhere. Their name, their email, their phone number. And also what I've started doing recently is I use Podio for all this to keep track of all my database and all my contacts. It's free software. In the beginning, I think I reached a certain limit of data. So now I'm paying like $40 a month. It's nothing crazy. And so on there, I always ask them, like, what do you like? Do you like basketball? Do you like the Spurs? Do you like, rodeos? Like, what do you like? Like, what do you genuinely like? Put it there. And then, when it's their birthday or when Thanksgiving comes around or a random time, you can send them a Spurs teddy bear, or like, something on Amazon that you find of something that they like. And I guarantee you it'll go a long way. It's a great way to raise money for like deals if you're looking to syndicate and stuff later on down the road, just to build that relationship with them. Missed the name of the software. The software, Podio.
Yeah, Podio. It's like a free CRM software that you can use and keep track of your leads that you're getting, and as well as your buyers when you reach out to them. So that you want to check that out, Podio. And there's like videos on YouTube to show you how to use it, Lodi.
Yeah. And if you guys get my contact info from Rachel at the end, and I mean, I'd love to help you create your app and your kind of business on Podio.
Yes. Good, Lodi. Good question. So now I'm really curious to know, just kind of backtrack, when we have the property under contract, how long do you give yourself to find that owner before that deal falls through?
I mean, you typically have both your feasibility and your closing. So, I mean, your feasibility, if you're going to put $5,000 of earnest, I mean, typically you have the feasibility time. So there's a few tricks that I've used, some gold nuggets that I could share with you guys. So, whenever we get a property under contract, my feasibility period does not start until he gives me the last 6 months of rent rolls, at least minimum of 3 utility bills, a T12, income expenses, any, like I try to buy myself as much time as I can.
Mm,
So my feasibility period does not start until I get a copy of all of these docs that I'm requesting. So that could take a week, week and a half,
right.
and then the feasibility period starts. And your feasibility period is where, if you terminate for whatever reason, you can get your earnest money back. Again, that's negotiable. You can put it in the contract. Sometimes sellers do say, well, you're not going to get the full 5 back. Maybe you're going to get 4, and I'm going to keep 1 just for my time. But again, this is where it comes down to building rapport with the seller, so that way he doesn't, you know, dig you down very detailed on all the contract stuff. But I would recommend the feasibility period does not start until I get all that documentation. Once I get all that documentation, then my feasibility period starts, and then you have that feasibility period to find a buyer. And then remember that after the feasibility period, there's a 30-day closing. So it's a 45-day feasibility or 30-day feasibility, and then another 30 or 45-day closing after that. So typically, I mean, you still have after the feasibility to find a buyer, but now if you terminate, you lost your earnest. So,
Mm,
I mean, you want to make sure, again, well, one big piece of advice: don't just get a property under contract and
mm-hmm.
get the property under contract if you're sure it's going to work, because you don't want to burn that relationship. You don't want to burn those bridges with people like that. So just make sure you're going to be able to wholesale it. And
Right.
I mean, to partner with someone who knows about wholesaling apartments. I mean, I'd be more than glad to partner with you guys to do my best with, helping you guys figure out if it's a good deal or not. So
No.
partner with someone, and you'll learn a lot partnering with someone.
So if somebody did want to partner with you, and you're willing, how can they reach you?
Yeah. So you can share with them my phone number, my email. I mean,
Yeah. Okay. If you want to put it in the chat, well, for the people who are here.
I would recommend to text me first. Introduce yourself. That way I know who you are, and we'll set up a Zoom chat, and we'll have a deal. Again, I don't want to come onto the call and like help from the get go. I want someone to come with me saying, "Hey, I did this. Like I tried doing this, and I
Right.
found this out." And that way, I'm able to help you better when you've already tried it. Like I don't want to do it for you guys, because then you're not going to learn. I
Exactly.
want you to try to do as much as you can, and then I'd be more than glad to hop on a call with you and review everything, and then help you, the best I can from there.
And it doesn't matter what state they live in. I know people come from all over. Okay. Great.
Yeah, it's very standard. You know, same way of finding buyers, same way of finding sellers.
Right. It's
I mean,
just
an
for.
apartment is valued on based upon the income, so I can help you. I mean, I guess the big thing would be to like determine the cap rates and stuff in that market, and figure out what properties are selling for, and for
Nice.
door.
Adrian, you're so nice. Thank you. I'm sure I'll help people take you up on it. I know I will, for sure. I will reach out to you because I was really interested in learning wholesaling multifamily as well. So that's great. So now I'm curious to know if you can just talk about, you know, when you find, because some of these properties, I'm assuming, because while you're searching for properties, you might also find some that you might not want to wholesale, and you might want to just buy and hold for yourself. And I know you're talking about, having a partner, and that can help you, because I know you've also done syndication deals. At least, how many have you done so far?
So we have 60 units right now.
Yeah.
I bought my first 16 unit. So I wholesaled 6 different apartment complexes before I bought my first one, which was January of 2019. It was a 16 unit. We were going to wholesale it and make $200,000, but I decided not to. I decided to take it on as my first hold, my first apartment syndication, and go through the whole process and learn it all. And so we raised about $175,000. We got a loan, friends and family, kind of pulled it all together. We had a property management company at first, fired them, hired another one, fired them, and then we ended up starting our own. But yeah, 16 unit. First one was in January of 2019. I was 23 years old. 6 months later, I bought a 32 unit. We syndicated that one, raised about 325,000. I found it through cold calling, Spanish speaking owner here in McAllen. So went through the whole process in Spanish and ended up locking it in for a little over $1 million. And we're just about done with the reposition, and the property is probably worth over $2 million now. And then 4 months after that, we bought a 9 unit. We syndicated the 9 unit. We raised about 145,000 for that one. So we have all those now, and we own and operate them.
Nice.
And we paid.
So you got your first property in 2019, yeah?
I bought my first apartment complex January 2019.
That's amazing. You already have 3 now.
Yeah.
That's so fast to me. I think that's pretty quick. Well, that's amazing.
It's been a ride. I think just some more golden nuggets is you're not gonna know it all when you come into business. You're not gonna be prepared enough to convince yourself you're ready. You're not going to be prepared. You're not going to know what to do. You're not, like, I'm telling you, like, from experience, I didn't know, but I knew myself, and I knew that I committed enough to, make the deal successful, make the deal work no matter what. Mm-hmm. So I think that's what really helped me and my partner, hop on this opportunity. And our investors in the beginning, they're not investing in the property, they're investing in us. Mm-hmm. So, when you commit to something, there's really no way it's going to fail. Like, if you truly commit to something, you're going to find a way for it to be successful. So that's what really, differentiated, me buying a property so early on in my career. A big property like that is because I just told myself I'm committed. Mm-hmm. I'm going to lease units if I have to. I'm going to paint, an apartment if I have to. I'm going to get a drill and drill some fixtures to a wall if I have to. I mean, I'll sleep on the floor if I have to. I'll do whatever it takes. Whatever it takes for that deal to be successful, I will do it. And that is what, you need nowadays, especially if you're young.
That's amazing. I love that. And okay, so now say we find a property and we're like, we actually want to buy and hold this one. Would you suggest that we partner with someone, I'm sure, on our first, of course, deal, but then how we go about doing that to then make sure that we can acquire that property for ourselves?
So I do recommend have a partner. I mean, it's very hard to be successful in this business just by yourself. I mean, you're going to have to manage the lender. You're going to have to raise the money. You're going to have to sign on the loan. You're going to have to manage the manager, you're all of that, manage expenses, pay investors. I mean, it's a lot to do on your own. So multifamily, you need a team. Whether it's just minimal 2 people, 3 people, but you need a team. So it also helps with accountability, with you and a partner. Pick someone that you can trust and, you respect to work with. And maybe one does underwriting. Like me and my partner, we have different roles in the company.
Right.
He's the underwriter. He's the analytical, structure, organized, type of guy, contracts. I'm, more vision, sales, boots on the ground, renovations. So we have different roles, but I do recommend you partner with somebody. But as far as buying it for yourself and partnering with somebody, I think it's super key, and you're going to learn a lot faster, especially if you partner with someone that's more experienced than you. You're going to learn a lot faster. And also, if you're going to buy a property, typically over $1 million, you need to have a net worth of over $1 million. So, I mean, you're going to have to kind of partner. You're going to have to partner with somebody that's over $1 million if your net worth is not. And they're going to have to sign on the loan, and they're going to get a percentage of the GP. So, that's typically what happens whenever you're buying a big deal. But you could buy a deal on your own if you have a good credit and good income, but I didn't. So
Yeah.
I had to bring somebody with me.
Yeah,
And that's how you learn.
exactly. I love that. So, I mean, thank you so much for joining. Do you have any last words, anything you think that we need to know that we didn't miss?
Uh, I mean, nothing really. I mean, if anyone has any questions, I took a few notes here.
Yeah.
We went over, my story off market, how to find them. You can talk to, inspectors, drive for dollars, cold call, small mom and pop management companies, referrals from other owners. I talked about a few deals. Brokers, you can also talk with brokers on like LoopNet, Crexy, get a list of brokers, talk to them, buy lunch, buy them lunch, let them know what you're looking for, let them know you're buying apartments. And just kind of bug them. Hey, when's that next deal? When are you going to get that next deal? I want another property to look at. I want another property to look at. Bug them. I don't really, focus too much on brokers. I like to find them straight to the owner, straight
Oh, wow.
direct. Like it's better, and I have more leverage. And we talked a little about wholesaling. So when you're wholesaling, just last minute thing. So typically, you're either going to assign it or you're going to double close on it. Typically, when it's a bigger fee, you don't want the seller to know how much you're making. So you double close on it, and by doing that, you get a transactional lender, and they'll fund the A to B purchase, and then you'll close on it, and then you'll turn around and sell it within that same day to your B to C transaction for a fee. So the transactional lender typically charges like 1% of the loan, which is a lot of money sometimes, but it needs to get done, especially if you're making a $200,000 wholesale fee. So
You say how much percent?
1%,
Mm.
1% per day.
Wow, per day. Wow.
Yeah. Or you assign it. And when you assign it, the buyer knows what you're making, and the seller could or couldn't. You have to get a wholesale friendly title company that knows, what you're doing and stuff. And I think it's super important to build that wholesaling team before you start wholesaling.
Mm.
And double closing is something that you guys should look into.
Great. That was great. Guys, I mean, maybe you want to type in the chat, thank you. We're going to be signing off soon, but I want to let you know we have all these recordings on my YouTube channel. It's Rachel Lagan. I'm actually going to put it in the chat for you guys. And let me hit, there you go. So you can RSVP for our next meeting, which will be next week. We're going to be talking about passive investing versus active investing. Should you, and then determine what's best for you and then the risk involved in that. So that's what we're talking about next week. But like I said, all of these recordings, when you want to go back and listen to Adrian Salazar, who you're listening to today, it will be on my YouTube channel. I'll upload once a week. So all of our past, meetups will be there in order that we, record them. So you can check it out there, Rachel Lagan on YouTube, and you'll see the Multifamily on Fire logo. Other than that, thank you, Adrian. I'm just so thankful that you were willing to share so much with us today. I know everyone you've given so much great value, and I just hope that, as we reach out to you, we also be able to maybe provide value for you in the future someday. Yeah.
Situations. Yeah. I think, a big reason why I do, things like this and share this is, if my mentor wouldn't have shared it with me, I wouldn't be where I'm at right now. So I hope to be, that light and maybe someone's, fire, and maybe one of you guys out there needed to hear this,
Mm-hmm.
and hopefully it changes, your financial future and allows you to live financially free. So, if my mentor wouldn't have done it for me, I wouldn't be here. I wouldn't be here right now. So it's my duty to give back.
I love that. Thank you. All right, everyone. So I guess that's it. Are we done? I guess we're good. You said very cool. Thanks. Thank you, Clay. All right. So until next week, I hope to see you all next week, and reach out to Adrian on social media too. What's your Instagram?
Yeah, I'll put it here. It's Adrian Salazar, and I think there's an underscore after that. But I'll put it in here. That way you guys follow me. Pretty active in there sometimes on my stories, what we do with the apartments,
Mm-hmm.
kind of my journey and stuff. So you guys should definitely follow. Add me.
Yeah, Adam, let's be friends. Let's all connect. Because I know this whole business is all about, relationships.
Yeah, absolutely.
Yeah, so I'm so happy that we connected. Thank you, Adrian.
You're
And thank
welcome.
you everyone for attending. And I hope to see you all next week. Okay?
Awesome. All
All right,
right.
y'all have a good rest of your Saturday and then happy Father's Day to any fathers.
Likewise.
Yeah.
Likewise. Thanks, Rachel.
Okay.
Keep it up, okay?
Thank you. All
All
right.
right.
Bye bye.